Hi, this is Dan Kurz, DK Analytics. It is still June 30th, 2019. You're in Central European time zone in Niederweningen in Switzerland. This is just a brief addendum video to the video that I spent quite a bit of time putting together and sharing with you earlier today. To my chagrin, the camera settings in that video deliver mirrored pictures instead of normal, meaning they're not legible. All this is here is those two charts that I displayed in a mirrored, non-legible fashion that I want to bring to your attention here with. And if you would kindly consider those in place of the ones embedded in the prior video, I would be grateful. Before I show you those, I apologize profusely for this mistake. I think the younger generation has been at work or at play with these camera settings, and this is my effort to set it right. However lacking this may be. Here goes. My first picture, the graph that I wanted to draw your attention when I spoke about precious metals, is a historical gold weighting in the S&P 500. And what I wanted to do was to go beyond just the 0.5% weighting globally. Precious metals is a percent of investable global assets of about 250 trillion or more. I wanted to drill down to the S&P 500, the gold stocks, and bring this to your attention in a smaller sense as to how incredible the opportunity is should investors decide they want more gold exposure. That's really what this is, and given how scarce and limited gold and silver are. So what you see here, all right, is the average. This red line is the average over about 3-4 decades. The average weighting of gold stocks as a percent of the S&P 500, the market cap of gold stocks compared to the entire S&P 500 market cap. And as you can see, or perhaps you can, this red line here, it's about 0.23%. We're currently way below it at 0.1%. As I mentioned earlier, we don't have reversion to the mean. We're not going to go back to 0.3. When this thing goes, it's going to go way up here. And the only way that investors can actually raise their allocation to gold stocks, given how tiny the market caps are, is, you guessed it, by buying them hand over fist, massively pushing up the equilibrium price or the stock price or the market cap of those companies. That is the opportunity. And then I spoke about the other graph that's mirrored or backwards instead of normal. That's this. That's this. This is the German government spending starting to arc up strongly from 14. It's up about 17-18%. I mentioned in the video that Germany's status quo politicians are afraid of getting booted out of office as people's parties rise in Europe for reasons that I'm not going to go through again here. Suffice it to say, huge immigration issues. And this chart kind of gives you a sense of where it's going. Again, up 17-18% total German government spending. This was the government that had financial rectitude. If it starts to go, that doesn't bode well for Europe, which is already in a pickle financially anyhow. Okay, there we go. I'm going to add this short video right after I get the other one published, and thank you for tuning in. Again, my apologies.